Everyone. We're going to do a unit, starting a new unit on investing this week. And so the first assignment is just an introductory assignment to what investing means, what it's all about, to have a stock, and so on. So I'm going to upload some notes that I am going to read through here on this video. And I recommend part of the assignment is to fill in the notes and then complete the NextGen personal finance activity. So if you haven't yet already, please make a copy of the notes so that you can fill in the blanks as I go through this. Don't forget, one of the beauties of having a video lesson is that you can pause to catch up or take a break if you need to. Right, so the basics of investing. This is the notes that you need to take today. A corporation is a business organization that can be owned by one person or group of people. So in the first blank of your notes, write the word corporation. A company sells shares of stock to investors to raise capital. Capital is funds which are used to build the company. You can invest money in a corporation by buying those shares of stock. When you buy shares of stock, you become a shareholder or part owner in the corporation. The more stock you own, the greater percentage of the company you own, and you receive stock certificates as proof of ownership. The number of shareholders in a company depends on the structure of that particular company. A public corporation is one in which anyone can purchase stock in the company. The prices of shares of stock in the public corporation are listed in the internet and in newspapers. So the first thing I want you to do is name 5 companies that you've heard of that have publicly traded stocks, and to find their name and abbreviation on the stock market or ticket symbol. And the way you do this is just Google the name of a company you know. For example, Google. Google is a publicly traded company. So if you look up Google, you would type in Google stock name or Google stock or Google stock price. Any of those will give you the Google ticket symbol, the name that is used for that company. If the name is really long, then it's typically abbreviated. Google is abbreviated slightly, and I want you to figure out what that abbreviation is as your first example. You need to come up with 5 examples of companies altogether to list in this section of your notes, and include their abbreviation name, which is called their ticket symbol. Let's continue with the notes. A stock market is a place or institution through which stocks are bought and sold. Each transaction in the stock market is called a trade. You can buy or sell to make a trade. There are several stock markets in the United States. The New York Stock Exchange is abbreviated NYSE. The National Association of Securities Dealers automated quotation system is more commonly known as NASDAQ. The Dow Jones Industrial Average, or the Dow, sometimes abbreviated, and the S&P 500. Those are very common ones in the United States. Other countries also have stock markets. In particular, Japan is the Nikkei, which is spelled Nikkei, and England has what's abbreviated as FTSE, and as sometimes called FTSE. Stock prices fluctuate on a daily basis, and we've seen in our probably lifetimes some of the reasons why this happens. Political situations or scandals within a company can cause the price to fluctuate, typically go down if it's a scandal. Environmental health impacts. This pandemic has definitely had a major impact on the price of some stocks. Other things that can happen are just product issues within the company. Company buyouts or takeovers can increase depending on the outlook of that company, or decrease. So list a few. If you can think of some of your own, that would be great. Okay, let's continue with the notes. You can make money from stock investments if the price of a stock increases from the time you buy it to the time you sell it. But you can also lose money if the price decreases over that time. Your profit or loss, however, is only determined at the time you sell it, at the time you sell the stocks you own. So as long as you retain your stocks, you haven't lost or gained anything. This is really important to know because a lot of people may be tempted to sell the stocks they own because the price has gone down. That's really a bad idea. You should hang on to them with the idea that if you're thinking of a long-term investment, things will definitely pick up long-term. And then you will have all those stocks still in hand and the value will go up. Day traders buy and sell stocks on a daily basis, or most daily basis. Maybe a couple days is still considered a day trader. Doesn't have to be particularly 24 hours. But most people invest in the stock market for the long-term financial gain, as in retirement, not for any immediate financial returns. So you're not guaranteed to make money from investing in stocks, but generally, over the long run, stocks make a higher return on your investment than other, less risky investments, from around 7% to 13% on average as a return of your investment. This is much greater than savings or even CDs or other forms of investing. However, there is more risk, and you do have the risk of losing everything. Some stocks fluctuate in price more than others. As with many things, the greater the risk, the greater the potential gain, and the greater potential loss. Okay, so I hope you are able to complete the notes for this section, and then I will upload the Next Gen Personal Finance activity, which is to take a closer look at the S&P 500. All right, great. If you have any questions, please let me know.